Hi everyone, I'd like to welcome you all to this enlightening event. So today's event is going to be focused on a very critical topic that resonates deeply with businesses and economies across the African continent. I am Ngozi Chukwu. I'm your moderator for today's proceedings, and it's truly an honor to sit before you and guide you all through this insightful discussion. Our event today delves into the fascinating theme: how can businesses reduce the cost of making payments across African borders? That is a question that carries immense significance, considering how increasingly interconnected our world has become, and the essential role that smooth and cost-effective cross-border transactions play in driving economic growth and prosperity across Africa. Before we delve into our discussion, I would like to introduce you to the two entities that made this event possible. That's TechCabal and AZA Finance. TechCabal is a platform that is not just about technology. We are about the real world impact of technology on businesses and individuals across the continent. And we do have this impact through our articles, reports, and engaging events like this one you are participating in today, where we shed light on businesses and human dimensions of tech and innovations in Africa. Some of you already know TC Daily, our newsletter, where we share a roundup of tech news and events from across Africa. If you have not subscribed yet, don't worry. The link will be posted in the chat room, so you can join and get our newsletters right away from tomorrow. But today's event actually is powered by TechCabal Insights, an arm of TechCabal that's all about the events, research, and data analysis that focuses on the digital economy that in Africa. And TechCabal Insights leverages a big data to assist startups, investors, operators, and big tech companies, including governments, within and beyond the continent. Our goal is to provide actionable insights that answers critical questions and enables interventions that catalyze growth and innovation across the continent. And on the other hand, we have the esteemed presence of AZA Finance, an African fintech powerhouse they have over a decade of experience leading cross-border payments in Africa. AZA Finance is committed to empowering businesses with secure and efficient financial infrastructure. They facilitate seamless payments, foreign exchange, and settlement processes to ensure that businesses. I'm sorry, can you all hear me?
Yes. Okay.
Okay, great. So as I was saying, AZA Finance facilitates seamless payments, foreign exchange, and settlement processes that ensure that that businesses across Africa can actually thrive. And their global infrastructure stands as a trusted gateway for people who provide remittance, and also for multinational companies and for forward-thinking enterprises that demonstrate this demonstrates commitment to propelling economic growth across Africa. So we have AZA Finance here today, and with them, we are going to uncover the innovative ways that people and businesses can actually mitigate the challenges and reduce the costs that are associated with cross-border payments across African borders. And the insights and perspectives that we gather here today will shape the way forward for many businesses and also for the entire African ecosystem. Once again, I extend my warmest welcome to each of you. Ladies and gentlemen, now that we're all aligned on the purpose of today's event, I would like to share the agenda of the day. All right. So before I delve into the agenda for today's event, I would like to welcome someone up here to give a keynote speech. Everyone join me to virtually welcome Elizabeth Rossiello. She's the CEO and founder of global payments and FX fintech AZA Finance that was previously known as BitPesa. Now, AZA Finance was founded in Nairobi in 2013, and it empowers companies to move money, exchange currencies, make payments, and settle easily across major African and G20 currencies. AZA Finance is actually the first ever to trade in digital currencies using mobile money, and the first ever to make a market directly between digital currencies and African currencies. Elizabeth has made profound contributions to the fintech landscape, and that has not gone unnoticed. For example, in 2021, she was honored as a 2021 Bloomberg New Economy Catalyst, where she was awarded, she was recognized as a catalyst for innovation and progress. Moreover, her impact has continued to shine in subsequent years. In both 2022 and 2023, she secured a spot on the prestigious Standout 45 Women in FinTech Power list by Innovate Finance. Now, without further ado, please join me in welcoming her on to give her keynote speech. Hi, Elizabeth.
Hi, Ngozi. Thanks so much. I really appreciate TechCabal doing this webinar with us. And I'm happy to share a little bit more. Should I just share screen? Oh, there we go. Great. Well, I'll just wait for the slides to go up. Great. So today I'm going to talk a little bit about the problems with cross-border payments, specifically in Africa. This is something that gets mentioned a lot globally, cross-border payments. It's the hot topic now in the payment industry, also in the banking industry. But when we talk about emerging markets, especially the continent of Africa, there's quite a lot of particulars that are at play. So for those of you that are working in governments, regulators, corporates, we need to talk specifically about the African continent. And thanks for going to the next slide. So 10 years ago when we started, almost 85% of cross-border payments in Africa were conducted via two correspondent banks. Now, what does that mean? That means there was a monopoly from two banks, Standard Chartered and Deutsche Bank, on all wires, SWIFT payments, and cross-border payments that went in and out of the African continent. We really didn't have a truly African solution. Most cross-border payments that were going from one African country to another, or from an African country to another market, had to cross through the US dollar through two correspondent banks. And that means prices were high, service was low. So 10 years ago, when many of the fintechs on the African continent were just getting started, we created this business, first in East Africa, then growing across the continent to tackle this issue. We thought it didn't make sense that there were so many ways to send money cross-border around the world, but not in Africa, and not using African currencies. And the thesis for us, and I believe for the continent, is about building African infrastructure. Now, what do I mean about African infrastructure? We need banks, switches, payment service providers, brokers, all working together across the continent to be able to trade cross-border with the same level of efficiency that you see everywhere else in the globe. And to do that, we needed global licenses. And we've received the Financial Conduct Authority license from the UK. We're licensed in Spain, Bank of Uganda. We've just received our Nigerian license, which we're quite proud of. And we have many more on the way, or we're partnering with licensed entities to do so. There weren't that many fintechs 10 years ago that had any licenses. So the last decade, we've seen quite a lot of progress. And that means new entrants, new people, businesses, corporates, institutions, all trading. That's good for consumers. And so you can look beyond just your normal bank. And we recommend that when fintechs come into the space, corporates look deeply at them to understand whether they're a good alternative to working with banks, or sometimes working with both a bank and a fintech. 10 years ago, we didn't have these options. Not even your local African bank could send an international wire. You'd have to still use one of the two major banks. So for us, it's been a really amazing decade in seeing this local infrastructure growth. And our company, AZA, is one great example of that. And we really look to have a local, global experience. Now, what does that mean? We can send cross-border payments anywhere around the world, but we have deep knowledge of each African market, each African region to understand what the corporates need on the ground. That means local language support. If you're calling in Senegal, we're speaking Wolof, Pulaar, French. If you're coming into the market in Nigeria, we have deep understanding of the local pricing. In South Africa, we have understanding of the local regulation. You really need to look to see which fintechs and which partners understand the nuances and the details of each African market. So although a lot of corporates are familiar working with banks, they're not familiar with what to look for when they're working with a fintech. Many corporates choose to work. Can you please go back to the slide previous? Thanks. Many corporates try to work also. Can you just go back to the slide? Thank you. I'll let you know and go to the next slide. Many corporates also work with local service providers that do cash transactions or require manual payments. What's really unique now, 10 years into the space, is the amount of digital transactions and digital products that are available. And we recommend that corporates look to try these new digital products. It might not be as familiar as working with a bureau de change, but it is important to note that the fintechs have had a decade of experience working, and a lot of these products are even smoother than your local bank. Right now, we still see the most expensive remittance corridors in the region. And why is this? Again, it's a lack of competition. If we lower the cost of remittances, we could see corporates increase their cash flow, increase their working capital, and grow even more. Some of the corporates that we've been trading with, we've seen them grow into new markets. So one of the benefits of working with a fintech that can lower your cost is that you then have more cash to go into the next market. And if you work with a service provider or a fintech that works with you in one market, it's easy then to expand across the continent. So another thing we look for is working with partners who could do cross-border payments across multiple markets. Because once you start to reduce your cost, and it is one of the most expensive remittance corridors in Africa, you're suddenly going to see the ability to grow into new markets even faster. And what we've really seen is that in Southeast Asia or South America, a lot of the local corporates work across their continents much quicker. We see them jump from Indonesia to Thailand to the Philippines. We see them go from Brazil to Peru to Mexico in a much more streamlined way because costs are lower. So if we can see those cost savings for African corporates, we can see them grow into new markets across the continent even better. And these statistics right here just prove that point, that we're paying more than other continents on these cross-border payments. So it's essential that African corporates really look for innovative solutions. You can go to the next slide, please. If we dig a little bit deeper, I'm sure some of these issues hit home for the corporates that are listening in. The bank charges. Right there, each bank that we work with has the ability to charge different fees. There's not a lot of streamlined regulations about what banks can charge. Working with a provider that absorbs this cost is essential. A lot of the fintechs, like AZA, will incorporate these bank fees into some of the charges that they have and able to streamline this payment process so you know what you're going to pay up front. The other very important feature here is that each market often has multiple banks and multiple partners. We see a lot of our clients, when they first start trading with us, tell us that they have 15 different service providers just for West Africa. This is a lot of legal work, partnership work, integration engineering work, treasury work. really looking for that streamlined partner that can provide services for you in multiple markets makes it easier to work cross-border. If you have to have multiple 5, 10 different providers in each market, it'll be less easy to go cross-border. And now we're seeing that that's possible. Companies like AZA and other fintechs are offering services in multiple regions, not just in West Africa, but East Africa. Please go back to that slide. Not just in East Africa, but also into South Africa. It's really important for that to happen. Okay. What we see also is the ability to use technology. We really see a lot of hard currency conversions, and I think a new innovation in this space is the ability to pay in local African currency. We should be able to demand that our invoices are in local currency, and local banks should not be only offering hard currency. If you're paying between Nigeria and Cameroon, you should be able to do a Nigerian Naira, Central African franc conversion. We have that ability in other continents. In South America, in Southeast Asia, in Europe, in Asia, you can see that all of the banks have offered these local currency products. The banks in Africa are not always offering those African currency pairs. It's a major point of friction for cross-border payments. And we would urge corporates to start looking for brokers and partners and fintechs that are able to do those local currency transactions. And finally, it's the speed of service. When you have slow service, you start to see the currency rate change over time, and it's hard to do business. So that fast settlement is really important as well. Going forward, I think looking ahead, we're going to see more digital payment solutions. While I don't think that the blockchain is going to solve the problems of Africa, I do think that digital foreign exchange payments are quite essential, and we're seeing them now more and more. So if your local payment provider does not offer you local currency transactions across African borders, streamlined payments using a digital product, and the ability to work in multiple markets, you're losing out. This is what other continents have available, and this is what African providers should be providing today. And we're very happy today to have some of the leaders in the space talk to us. We have 2 of AZA's own team on the ground. Here today, we have Fatimah Gana and Nani Yaw, who are here to talk about what's happening on the ground in West, Central, East, and Southern Africa, where they're working with corporates every single day. We also have Lucia Okafor and Fadeji, who are here to speak about their experience in the space. And we're really happy today to talk specifically what can be done. We talked a little bit about working with providers that are in multiple markets, that are able to offer currency pairs in local currency across those markets, digital products instead of manual payments where you have to physically go into the bank branch, the ability to execute payments on your laptop, over the phone, or with your app. And finally, the ability to have a streamlined service that's localized to your market with a lot of information. Payments are important because the rates are changing all the time on the African continent, so information is key. Your provider should be able to tell you local market knowledge, understand what's happening with the central bank rate, understand what's happening in global environments, provide you with research, provide you with information. We should expect the same level of service on the African continent that we see elsewhere. That includes news flashes, rate updates, account managers that are there to service you. We shouldn't be expecting less on this continent. And after 10 years of fintech evolution in the space, I'm happy to see some of this evolution and innovation coming to the market. And we're happy to talk today about what the African consumer and client deserves and what's on offer to take advantage of. And with that, I'll hand it back to Gozi and hopefully get this panel started.
Thank you so much, Elizabeth, for that insightful keynote address. She already mentioned some of the people that are going to be speaking on the panel. And for those who don't know or yet, the panel is going to be discussing the challenges that businesses face while making payments across African borders and proposed solutions that will address those challenges and make and how cross-border payments can actually be less expensive. And our panelists bring a wealth of knowledge and diverse perspectives to the table, so you do want to pay very much attention. I would like to now, before we get started, I want to encourage you all to actively engage in the discussion, take notes, and share your thoughts and insights and questions throughout the event in the Q&A box. Our chat room moderator, Victoria, is an event officer at TechCabal Insights. She's here to ensure a smooth and engaging experience for everyone. So now, the theme of the panel of our chat is how can businesses reduce the cost of making payments across African borders? And today we'll be hearing from Dari Fadeji. He is an international trade expert, a seasoned supply chain professional with over a decade of experience in leading multinationals within the FMCG sector. And his expertise spans across various areas of the supply chain, including demand and supply planning, international trade, and more. Dari's cross-geographical experience within Africa has granted him invaluable insights into how cross-border works generally. And somebody else you've been hearing from is Lucia Okafor, and she is a senior manager in the payments and financial services strategy at Deloitte. And she has 15 years of experience consulting in consulting, and she has industry experience in shaping and executing corporate business and digital payment strategies. As a senior manager at Deloitte, she has been at the forefront of banking and payments, and she has played several roles in groundbreaking projects like designing Africa's first central bank digital currency, that's CBDC, and also in South Africa's digital identity program. We'll also hear from Yaw Owusu Banahene, is the original head of Africa partnerships AZA Finance, and Nana leads Africa partnerships at this global fintech company that's currently revolutionizing economic growth in Africa through innovative foreign exchange, payment, and treasury services. His expertise and his close collaboration with businesses that are international make him a pivotal figure in streamlining cross-border payments. And also, we'll be hearing from Fatimah Gana. Fatimah Gana Mahmoud. She's the head of sales at West Africa and Central Africa at AZA Finance. Fatimah spearheads sales efforts in West and Central Africa at AZA Finance, at the largest non-bank broker for foreign exchange and treasury solutions across the continent. With a background in ICT infrastructure, e-commerce, and finance, Fatimah brings a holistic perspective to our discussions. Great. So I would like to once again invite our attendees to actively engage our panelists by sharing their questions in the Q&A box. Throughout the discussion, they will address as many of your questions as possible. So let's start. First off, I would like to ask Dari and Lucia. Hi, Dari and Lucia. Can you please shed light on some of the pain points of African businesses? Like what challenges do they encounter when dealing with cross-border money transfers within and outside Africa?
Hi, everyone. I was thinking Dari will start, but I can go first. And I think Elizabeth summarized it very nicely in her presentation where she talked about some of the key issues, and I think they're usually around two, which is the cost of the payments, of cross-border payments. And I think she had some stats which I think on the average it should be around 6%, 4 to 6% of the transaction. But you see situations in Africa where fees is up to around 15, anywhere from 15 to 30% of the actual payment. And so you can imagine how expensive it is for African businesses to send money, and do their payments across border. Another thing she talked about, which again, I think is really true, is the speed. Of course, whether you like it or not, businesses want to ensure that they can move money pretty quickly. And because of the correspondence banks, around would mean that the speed is much, slower than, you'll expect. Of course, people like AZA Finance and the rest are helping reduce that speed, but that is also a challenge. A third one, which I probably missed, which is transparency. There's usually not a lot of transparency around the fees, or what you're charging, how it's going to move. So and because of that, that's what even drives the hidden fees and the rest. So that's always a challenge for businesses as well, because they need to plan ahead, and if you don't have transparency around the whole the payment process, you're unable to plan, which is a challenge. Of course, the last thing I'll talk about, which I think we can all relate in Africa, especially in Nigeria, is the FX, because that is a major component of the fees. At what exchange rate are you changing the fees? It could change like literally in a minute or in several times in a day. That is very difficult to plan as well with. So that is also a major challenge to businesses.
Thank you, Lucia. Gary, are you you're back now? Hi,
Yes,
Gary.
I'm back.
Yes.
Hi, Ngozi. Thanks. Hello, everyone. Good morning to those who are not on the same time zone. Good afternoon or good evening. Yes, so I think Elizabeth summarized it very clearly, and Lucia also touched on it a lot. Some of the challenges we see today, it ranges from exchange rates, and because there are so many intermediary banks for African transactions, we get to see a lot of surcharges. Sometimes we pay charges 2, 3, even 4 times on a single transaction. And on top of this, there are losses each time you are changing from one exchange rate to the other. So for instance, I want to pay somebody in Kenyan shillings, but I have to, first of all, incur the cost of converting to the US dollars, and then from USD to Kenyan shilling. And in the process, I will lose value in exchange rate because, of course, the middlemen who operate this today, they are in it for the money, and we get to pay a lot on that. So today, all those challenges are there. There is also the fact that because we have to go through this multiple hurdles, it's very difficult for planning, like Lucia said. So we are not able to say specifically that this is how much this transaction will cost. In Nigeria, for instance, we find ourselves in situations sometimes when we place an order at a certain value in dollars, and by the time it comes, because of the exchange rate and all, by the time we are paying back to the suppliers, there are some transactions that end up coming at a loss because of this. So these are very critical challenges that we face today. And we also see that in the process of doing this, because the trade is happening in dollars, more or less, we are strengthening the USD the more. And you find the USD getting stronger and stronger, not because of the basics of economics in the US, but because of the transactions that's happening worldwide. Meanwhile, we are doing this at the detriment of our own African society and our economy, which is difficult to recover from. So these are some of the challenges that we see. And I think as time goes on, maybe as we talk about the solutions too, we'll delve into it. But I think it's very important for us to have that viable partner that will be able to carry out our transactions without, first of all, converting into another currency. And if I could just touch on something that somebody mentioned on the chat box as well on blockchain. While blockchain technology could facilitate such payments, we are still very, very far off in terms of adoption within the continent and even globally, because there is no transaction you want to do. For those of us in international trade, we know that like them or hate them, government is your best partner because you cannot do anything without them. Governments at the moment are not so receptive to blockchain technology, and that will make it a very big hurdle to cross, especially for big corporates. Maybe for small companies and individuals, yes, but for big corporates, it's going to be a big issue with the volume of transactions we move across. So it's going to take a while. When the adoption happens, maybe in the future, maybe it's going to be a viable solution. But as we stand today, we are still far from it.
Thank you, Dari. That was very insightful. Lucia, while you spoke, you mentioned, currency fluctuations. So I want you and also Dari and Fatima to just briefly talk about how these fluctuations, to elaborate briefly, how these fluctuations often complicate the predictability of cross-border payments, and how can businesses effectively navigate these fluctuations?
Okay, I think I can go first. I think Dari, as part of his his response, actually touched and gave a very good example of how that works. I think it's a challenge that we continue to face in the continent, and some countries more than the other, which is that FX, because we're reliant on a third currency all the time, you have to think about what the exchange rate is, and because it's so volatile, you can't plan. You need to hedge, if I would say, some of that, your payments ahead, just because you don't know what it would look like. And so because of that, you have many businesses running into losses, because a lot of businesses are reliant on external companies outside, or suppliers outside of the continent, or outside Nigeria, or the country, using Nigeria as an example. And so because of that, they need to source, and they have to source foreign currency to make those payments. And some of the ways they can, it's usually one of two things, or at least one of a few things. The first is your sourcing. You need to look at your sourcing. You need to probably think about looking at local sourcing, looking at how you can get local suppliers, because if you depend on external companies, then definitely it would affect your inputs. All right, if the interest rates or the exchange rate increases, that's it. So you need to think about how your sourcing strategy, look for how to get local sources, and again, also check that your local sources are not also sourcing outside the country, because some people do that and it's a problem. The second is your revenue. You also, because the challenge also you have is when you purchase, internationally and have all your revenue comes locally, that's also a challenge. So one thing you need to also do, or businesses need to look at, is how to get revenues from outside their local environments as well, because by doing that, you also are able to gain some foreign currencies that would help you as well. Because if you can do the two, I think it's even much better. But that's a place, because one challenge most people have, and Dari's example was a perfect example. I source locally, I source internationally, then I have revenue locally, I just can't sell it. And then when I sell, I can't even purchase again, because now I sold at a loss. So I think between those two, as a starting point, businesses can start to figure out a way to manage their FX exposure when it comes to cross-border payments.
Yeah,
Thank you. So, Fatima.
Yeah, so I would actually recommend businesses to do two things in terms of managing currency exchange fluctuations. The first is you need to keep an eye on the trends, so you can be able to plan your movements, accordingly. And for businesses that make like frequent transactions, I would suggest that you can also sign up for FX Insights. And that way you're able to have like information about the markets that we operate in and that we also operate in, and have better information about other countries in terms of scaling up the business. Additionally, I'll also touch on the point that I think Dari and Lucia also mentioned, which is finding a partner, whether fintech or a bank, that doesn't use the USD as local currency. And that's why, because if you're moving money from, let's say, Cameroon to Abidjan, which is within the southern region in terms of currency Africa, it's hard for you to convert your bank to dollar. African banks don't have corresponding bank statuses, so it takes longer for your transactions to take. Additionally, you can also incur some costs, as regards the volatility of the currencies that you also. So those are my 2 points.
That was very brief but insightful. Thank you, Dari. Yes.
Yes. So I think both of them, the two wonderful ladies, touched on a lot of operational issues, which I think about captures most of it. But I also want to look at it from the business angle. So if I look at the impact that currency fluctuation has on businesses and on the economy as a whole, I'm sure a lot of us read not too long ago how GSK is planning to pull out because of this.
Okay, I think we lost him.
Yeah, I think we lost him. All right, let's go on then. Let's listen to. I have a question for Nana and Fatima. You're both experts in, the business of facilitating cross-border payments. How does AZA Finance approach these challenges?
So we're very aware of these challenges, that happen in terms of like cross-border payments, and we try as much as possible to, stay abreast of this by putting things in place. Some of which is we offer deep liquidity in all the markets that we operate, right? And that way we're not able to charge operating costs or, in demand currencies, that goes to the customers. Additionally, we also have like an incredible, local and regional knowledge, that helps us to have a lot of information, about the markets that we operate in. That way we're able to make sure that, all of our transactions are handled, all operations are, within the regulatory requirements, and we don't have any regulatory infractions in terms of our operations. We also have robust infrastructure in terms of bank accounts, partners, and technology, and this helps us to be able to move pretty fast. And of course, when we move fast, we're more efficient, and the more efficient we are, the more costs that we save for our clients and for our partners. I would allow Nana to mention a few points also on this.
All right, Nana, please hold on. Before you go, Fatima, can you please check your mic? I think your voice was breaking when you were speaking. So when I call it up again to speak, it might it would be a lot clearer then.
Okay,
all right.
thank you.
Thank you. Nana, please go on.
Thanks. I was just going to say Fatima said everything. So I think what AZA has done, and AZA has been in the market for over 10 years, and we've continually built infrastructure, right? So now what we are trying to do and working with banks and fintechs is to enable them to tap into our already existing infrastructure in terms of technology infrastructure to facilitate some of these payments, right? To directly pay into other African markets. The other thing is also liquidity funding, and we've created that system where we have liquidity to support some of these payments across the market. So I think beyond everything, we've created that operational infrastructure, the technology that the banks and the fintechs can tap in, and also where necessary in terms of last mile settlement, we have liquidity to support it.
Okay. So my other question is, mobile money and blockchain are gaining momentum in Africa. I think Dari mentioned blockchain, briefly just a few moments ago. How do you envision these technologies contributing to lowering cross-border payments across, to lowering the cost of cross-border payments and also increasing financial inclusion? I'll start with Lucia.
So I think Dari has talked about blockchain. I think the capabilities that it presents, it brings with it is what it's useful. When I started, I talked about some of the issues, which is speed and cost. And so blockchain, provides that opportunity for us to take out some of the intermediaries, right, and the correspondent banks that we've all talked about. And that would hopefully, make it cheaper. Blockchain also comes with speed as well. It can also improve the speed. And then it has some capabilities like smart contracts. With smart contracts, you can kind of, you can use smart contracts to complete your transactions, and so because of those capabilities for blockchain, you're able to process the payments better. There's better transparency. But like Dari said, its adoption is still miles ahead. And you also need the the contribution and support of not just your country, but other countries as well. Like Dari said, like the governments and all the other infrastructure providers, and that would help this work. And I mean, I'm looking at the chats and the comments, which I think are very, very insightful in the chat. And someone is, they're saying, why can't we have one body? Why can't we all do it together? The issue is that one of the things people forget to understand is Africa is ahead in payments infrastructure, but people don't realize that, because we had in Africa, we had the privilege of not having any legacy systems, right? So we had the opportunity to leapfrog ahead of American and even many European countries as well. I actually sit in London, and when I talk about the way our payments work in Nigeria, they don't believe me, because they think, I keep asking, like, seriously, is this how payments work here? Something we've done like 11 or 12 years ago, right? And so because some countries are way ahead of the other, and unfortunately the costs that is required to develop, build infrastructure is expensive. It's very expensive, and not many countries are willing to invest in those infrastructure. And that's why we have to give it to the fintechs like AZA Finance, who are building that infrastructure, across. So I think blockchain will help, based on some of the capabilities it brings. Also for mobile money, one of the things you would see is it helps with very small transactions. And for small businesses, that's what they need, right? It's not a large, that are moving $50,000 or, what transactions. They are doing very small ticket transaction, and mobile money can provide that, the opportunities to do those small transactions faster and cheaper. But again, those systems have to talk to each other. And that's why, the Pan-African payment systems, settlement system might be an opportunity for, Africa to come together and create something. So like someone asked that question, I think that's the idea of PAPS, which is working with AFTA to come up with a system that ensures that somehow you can connect and pay you maybe pay in Naira and collect in Kenyan shillings or something. But the point is that infrastructure is being built, but it's going to take a step, it has to take one step at a time. But I think they definitely provide an opportunity to build and improve cross-border payments in Africa.
Can I respond to this as well?
Yes, sure.
10 years ago, we began the first exchange on the African continent with our first company called BitPesa. And we had hoped to become what we call an on-ramp or off-ramp for digital currencies. Because again, blockchain means nothing. Blockchain is the name of a technology. That's like saying computer or internet. It means nothing. It's like the internet can save us. How? In a million different ways, with companies and engineers and programmers and ideas. So just the word blockchain coming out loud means absolutely zero. And I say that as the former chair of the blockchain committee and the World Economic Forum. We have to actually build businesses that use it. We have to have products that use it, people that use it, people that trade it, places to trade it, on and off ramps to trade it. All of that infrastructure that I talked about in the beginning that we have to build for payments, we also need to build for blockchain related products, or products that use a public or a private blockchain. Currently, right now on the African continent, we have a few pieces of regulation in South Africa related to blockchain-related services, specifically cryptocurrencies. And in Nigeria, we have the beginning of a pilot project with very few practitioners in Nigeria from the Central Bank of Nigeria. That's at its very early stages, and there's not that many people using it yet. So besides those two places, and some, nascent regulation in Botswana, there are not a lot of places on the continent that have thriving ecosystems. Now, what we do see is individuals using this, individual traders. And those range from small value traders, a couple dollars here and there, some students, all the way up to millionaires trading this. Self-made millionaires using it, and millionaires from the normal world that came over to this space. We also see some businesses and some exchanges. These are the first mushrooms, the first sprouts of an ecosystem. To get to the point where you can do a cross-border payment, you need a sprout on both sides. You need a market maker on both sides, an on and off ramp on both sides. Now, AZA Finance does trade some digital currencies with other businesses, not retail use. And we are helping these mushrooms grow. And we have been for 10 years, but we have a long way to go. Unless you can pay your landlord in digital currency, or you can pay the warehouse you're importing from in Germany in digital currency, you need to be able to exchange that. So we need exchanges. We need on and off ramps. We need other people willing to buy and sell it from us. We need to have products, technologies, wallets, and most importantly, we need to have government and regulation that allows us to do this. I won't name names, but several African countries have banned retail use of this, or they let retail use, but they ban companies from having accounts, which effectively bans parts of the ecosystem. So we are not in a place yet where we can have a thriving ecosystem based on blockchain-based products until we have all those mushrooms in the ecosystem sprout. We're not even there with fiat payments, which is the title of this whole session. So I think we have a long way to go. Now, we have seen progress, and we are really happy some of our clients are trading, and we welcome more businesses to start experimenting and trading in this. And we have seen more warehouses, more wholesalers globally willing to accept digital currencies directly. Now that's awesome. If you can import from Asia or the Middle East or even parts of Africa and make a payment in digital currency, takes away the need for a rail or an infrastructure or a mushroom, pay directly. Those are few and far between, but it's a welcome innovation. So I am not against the use of blockchain technology. I just hate when people say the word. It means nothing. It's like saying energy. It can mean anything. We have to really make it into, we need people, founders, companies, corporates, governments, all using this technology. Otherwise, it's just a word.
Thank you, Elizabeth, for that. Yeah. Hi, Fatima. Can you tell us exactly how you envision blockchain contributing to lowering cross-border payments, like the cost of it, and also to include encourage financial inclusion?
So like all of the co-speakers mentioned, it's not something that, would happen like now immediately, just like we see the impact of mobile money transactions with the adoption across different jurisdictions. However, I think with time, we would see similar impacts with, the mobile money transactions affecting cross-border payments, in future.
Thank you. Now let's hear from Dari. Dari, what do you think?
Yeah, I think basically it's I think one other thing that we need to consider as well is while I appreciate what organizations like AZA Finance is doing, I think one thing I envision in the future, everybody together. Ideally, that's what the central bank of the 54 African countries should be doing, ideally. But we all know that if we wait for that, it's maybe centuries. So what I envision is companies like AZA Finance also collaborating with other organizations of like mind to build a robust system where there could be easy interchange between them, and that could make payments easy. I think rather than competing always, I think there is also a place for collaboration that could strengthen the financial system in Africa and help to increase financial inclusion across the continent.
Thank you, Dari. Dari is saying more collaboration, and yeah, I totally agree with him. So I want to ask everyone, right? Starting with Nana, right? Right now, the regulatory landscape for Africa is largely fragmented, and all of this can be a hurdle for businesses that are engaging in cross-border transactions. What role can governments play in simplifying regulations and fostering a more conducive environment for affordable cross-border payments?
Thank you. I think the key thing for governments in Africa mostly is how do they win the next election, right? So How does this benefit them for people to see that they are doing a good work? And that's one of the rules that we as industry players have to let them know, right? Definitely government changes the landscape. Government, with government policy, this cross-border payment challenges that we've spoken about can be gone in like some few days, right? If all the African Union meet and say, okay, going forward, we are going to do this and this and this, by policy allowing private sector to take the lead, not necessarily bringing a policy and then the government themselves institute the product to take the lead, right? So definitely government is very much important in the space in terms of understanding the benefits of liberalizing and democratizing the cross-border payment space. And what do I mean by that? One is that let's set regulations and guidelines working with the regulatory authority around the dynamics of enabling cross-border payments, right? I think definitely there's a lot of transactions going through intra-Africa, which is not even captured, right? Not the ones going through the banking system. There are ones that are done at the borders. There are ones that are done when somebody's traveling, somebody gives him money. So there are several of these payments happening, which is not even captured. And then it's in the government's own interest to know that when these things come into the regulated system in terms of fintechs and banks, it contributes to several things that they are looking forward to, like GDP and all those things, right? And even exchange rate stabilization. So we have to work with government because, you know, the broader vision of government is the welfare of their citizens, right? So we need to let them know the benefits of enabling these guidelines and regulations to allow cross-border payments to thrive. And it should be done in a way that allows it to be private sector led.
So much, Nana. Let's hear from Dari. Dari, hi.
Hello. Yeah. So I also think, thank you very much for that. And I think I cannot agree with the government because, like I said earlier, if we wait for the central banks of the 54 African countries to get their acts together, it's going to take probably a century. So we need a lot of private sector-led initiative in this to be able to move forward on the payment solution. I also like the idea that we need to sell it as an initiative, just like the same way you'll sell with products. Because if you let the governments and the individuals and companies, if you let them see the advantage, what's in it for them, it's easier for them to buy in. And I think one thing I'll just like to add on top of that is that the charges need to be very, very minimal. Because if the charges are not minimal, we'll end up creating a giant structure that is not so much different from what we have today, because the system we have today is not working because of the exchange rates and because of the charges. So I think the system should be pocket friendly, even for individuals who want to buy cross-border and then B2B. So if we have reasonable charges, it's going to help a lot and go a long way.
Okay, I've got a different question for Fatimah and Lucia, right? So while the government is while we are still working on simplifying regulations, how can small and medium-sized enterprises, SMEs, leverage technology and innovation to compete on a global scale and navigate the challenges that are associated with cross-border payments?
I think for, all businesses, whether SMEs or large corporates, customer experience is very key in terms of scaling up your, operations. And I would say that, two of the ways that I could point out on this, webinar today is, offering, finding a partner, a fintech partner or a bank that, offers 24/7 customer support. You don't want a situation where, you have a transaction glitch and you're running up and down trying to find ways to, solve the problem or call offices, and things like that. Additionally, I think that it's also very important to find, a banking partner or a fintech company that that has, technology, uses technology to be able to offer its services or products to its customers. And that way there's no restriction in terms of like geography. So you have access to a wide, network of customers, and of course, this helps you to be able to, offer different or various products in different jurisdictions, for your clients as well.
So I think Fatima said it. I think I just wanted to make some points, maybe, because one of the things of cross-border payments is to understand the different types of cross-border payments. I think Nana, everyone has talked about it. And the different types of cross-border payments come with issues. So remittances has its own issues. And then you have B2B and you have C2B, which is your e-commerce, right? One of the issues why Africa has a challenge, which is why, we can't jump to payments when intra-Africa trade is not visibly developed. It's still being developed. Some corridors have been developed. And I think some corridors like SADC and, the ECOWAS, they've tried to develop it, but that corridor, the trade corridors have to be developed. Now, if we wait for the government, first of all, regulations always catch up. They always play catch up in payments, unfortunately. So we don't expect the government and, and regulatory regulations to lay the path, or they can't do that for us, unfortunately. But how payments can help is that we need to build the trade, and payments will follow that trade corridor as it goes. Unfortunately, many of us do not have visibility over, on what other countries are doing. Sitting in Nigeria, I remember when I used to work at PwC, we worked on something that required us to understand payment trade across different corridors, and we couldn't get a lot of information online. We had to do physical research that required us to get information, and that makes it very difficult. So we need more collaboration, and that's how businesses can compete, because first of all, you're dealing with very expensive expensive value chain and processes. So sourcing is expensive because, of course, how are you going to compete? Your products will never be competitive in the global markets, right? Unfortunately. But if you can find low cost inputs, you can then be able to produce, products or services, or offer services that can globally compete because it is cheaper, or it offers more value. But how do you do that? And that's why we need to unlock value within the African ecosystem. And based off of that, we can use technology. And of course, Fatima's talked about using fintechs and but social media is one. Many businesses are opening up on social media, using Instagram and using all the other social media platforms to showcase their products and services. And we can tap into that as a continent and find our sources of inputs that would help us, so that when we start to project it outside of Africa, it's cheaper. Another thing we need to work on is collaboration. So one of the issues we have is most banks will not talk to a small fry as a small business, unfortunately. But if you come together, if you collaborate and come together, you're likely to then be able to command more, and demand more from them. But if you don't, unfortunately, they would offer you what, fees would be. You can't negotiate fees. It's very difficult to negotiate anything with most big banks, right? Or so it's essential that we collaborate together, and you can then approach these fintechs, or, approach the companies that you need support with more people. And based on that, you can then, be able to negotiate better, and you'll be able to compete better.
Can I just add to that? I mean, we already see intra-Africa trade, I think a lot of the trade is unreported, or it's informal, or it's through means that we don't always recognize with statistics from the World Bank. But every single time AZA Finance opens up a new trade corridor for payments, we see demand. In fact, we have more demand than supply. And so I think it's there. I think African trade, intra-Africa trade, regional trade is there. I think everybody's been trying to find a way, whether it's informal or formal. And I think, it's not a lack of demand that's the problem. I think right now it's information spreading. So these products are out there. Here we are. There's a lot of companies who offer products to help you run a retail business. There are less that help you do wholesale. But to look outside your standard high street brick and mortar bank. And I think too often in the last 10 years, many Africans and African businesses have relied heavily on mobile money. And everything is going to go through MTN, or everything is going to go through Vodafone or Safaricom. But there's more than mobile money now. Often there are fintechs that provide as fast payments into local banks that mobile money, and for larger amounts that are more suited to businesses. 10 years ago, everybody was using mobile money because it was the best technology. 10 years later, we have moved forward and there's more out there to be shared. I see some comments on the Q&A a little bit about the API, and I just want to say one thing. APIs now across the continent are connecting into both mobile and banks. So it's not one or the other. You see now most competitors in the space have to offer bank and mobile products. And we are already collaborating. And a lot of them have an API, which is a gateway to use cross-border, multi-channel, bank, mobile, cash network. And that's really a beautiful thing. And I think even smaller businesses are creating the capability to connect into these APIs. It gives you a superpower that we wouldn't have been able to have 10 years ago. It would have been too expensive to build that. Now it's quite simple. You can hire a college kid to do it for you, to help you integrate and bring your business forward.
Okay, Fatima, would you like to add anything to what Elizabeth has just said?
Yeah, we're still talking on customer service and payments, right?
Yes.
Okay, so, well, I think one last thing I would like to add is, the use of technology where, it's easy for businesses to be able to do KYB, online, and also do your transactions, carry out your transactions online and have, like AML checks, PEP screenings and whatnot, and makes it, highly efficient for businesses to be able to monitor, like transactions in terms of cross-border payments, making sure they're really genuine, and legitimate.
All right, thank you. So speaking more about customer experience and that it's data security and privacy is becoming an increasingly paramount conversation across Africa, especially with the increase in mobile penetration across the continent. So what measures do you think businesses should be taken to ensure the safety of cross-border transactions while keeping costs in check? That's for you, Lucia.
Oh, okay. I think Fatima actually started. You can't take out the issue of fraud and and all the risks that come with cross-border payments. Unfortunately, you could only protect your immediate, environment, but as it travels through across different borders, they're worried. There's a lot of issues, with how regulations, what regulations they have in place there, what's how they tackle fraud, what do they put in place? How do they know KYC? How do you know your customers there? There's a lot. How do you anti-money laundering rules, so there's a lot of things to worry about. But I think, as Fatima said, you need to work with organizations, fintechs that know their own in terms of fraud and what they put in place, right? It's very important to ensure you do that. But you also need to do your own due diligence, right? Because you are the one making payments and you have responsibility for it. So as you also trade with people, you need to make sure that you are comfortable and you understand what they're doing, even though the system, helps you, and what fintechs will put in place will help you and the government will help you, but with all the regulations, but you also need to do your due diligence. So you need to be able to be sure you know who the supplier is, understand what they do, and a lot of things around them, just so that as you trade with them and make payments, you're sure that you're not paying to someone, who's either a fraudster or it's fraudulent, or, it's used for issues, something you don't want to be a part of. But that's very important. But another thing I would also mention is that when you also do transactions, you also make sure you get all the information that is required. Check what the regulations are. Try to also be knowledgeable about it yourself. A lot of that is published around, what you need to understand from, whoever you're trading with, and you need to try and get those information. There's some public registers available as well, depending on what country you're dealing with, in terms of checking if they exist, the existence of those companies. It's important to also use those resources. But again, like I said, some companies offer those services, so you also need to take advantages of them, just so that you don't go and pay your money to someone that turns out to be fraudulent. And unfortunately, it's always very difficult to litigate such issues across borders. Then even within the country is difficult, and then across borders is even worse. It's much more difficult.
Thank you, Lucia. You pretty much just emphasized a point out that has recurred throughout the conversation so far. And that's the fact that cross-border payments involve multiple stakeholders, banks, fintechs, companies, and regulators. So I want to ask you and Nana, how can collaboration between these stakeholders be improved, right, to create a more cost-efficient, safe, cross-border payment ecosystem in Africa? And also, how can different African countries collaborate to establish a unified approach, right, that benefits everybody across the continent? Please start on that. Yeah.
So I think for us in AZA Finance, it's already happening. We collaborate a lot with regulators across the markets, because the point is, as Lucia said, regulators try to do the catch up. In some markets, they are trying to run a bit faster, like how the fintechs and the banks are running. But one of our biggest models is we are a B2B company, right? So it means that people can use this, and we can also use other partners. So we collaborate a lot with a lot of fintechs. So in other markets, we connect to fintechs to do the last mile terminations or the last mile payments in those markets. Some fintechs connect to us to do last mile payments and terminations. Some banks are using our infrastructure. So in the sense of businesses having this convenient access to make payments, you don't necessarily have to come to an AZA Finance platform to say, I'm sending the money. Sometimes your bank can be using our infrastructure to do that last mile payment for you, which does not involve the cost that comes about with the corresponding bank structure, right? So we do that level of collaboration a lot with banks, with fintechs, and with regulators. Sometimes we contribute in terms of the policies they bring out. Sometimes we contribute in terms of the guidelines, because at the end of the day, you also have to see yourself as a stakeholder, right? As I mentioned earlier, you cannot just leave the government and the regulators alone and say, hey, we are waiting for you, bring the policies and regulations, and then we'll try and catch up with it. You have to work with them to make sure that they don't understand the market like you understand, right? Some of them they just forgive me. They're just economics in school, right? They are more monetary policy oriented. They are not like customer service, market dynamics oriented. So you have to let them know what's happening within the market and how some of the policies we shape to be able to serve the customers better. So we do that a lot. And I think that sometimes involves you yourself as a fintech reaching out to some of these partners and some of these regulators to make this happen.
Thank you, Nana. Lucy, before you start, I would like to let the audience know that we are about to launch a poll. It will pop up on your screen, so please engage, and we'd love for you to respond to the poll. Lucia, please go on.
Yeah, so I think Elizabeth said a lot, when she said that, when AZA Finance opens up, demand comes up, they see the demand. Absolutely. I think one of the areas that we need, support or help can come is by sharing the insights, right? The insights that you get, fintechs get, a lot of fintechs go through these countries and they see a lot. It would help drive that collaboration, because some reasons why some corridors or some countries are almost abandoned or, overlooked is because people don't see that the potential as much as you see. And I don't know if you know how much, for instance, in what it looked like in Nigeria 10-15 years ago, a lot of people were starting to see the potential, and some investments were made by some big players, an example would be InterSwitch, who started in, 30 years ago. They actually, made some investments that were not, were not realized until several years later. And I know that that's what a lot of fintechs are doing. They're building one country at a time, and they're building, one corridor at a time. They're trying to sort of do the link. I know a lot, Flutterwave, several of these fintechs are going across the continent. But I think it's important to share the insights that you gain. And I'm sure you do. I'm not saying you don't, but I think there's a lot of work we can do in sharing those insights, just so that it can start to drive a lot more conversations around what can be done to smoothen, the issues across those corridors, what you're finding out. Because collaboration, unfortunately, is, whether we like it or not, we have to build those infrastructure and connect the countries. There has to be collaboration on both sides. So if one is doing it and the other is not, right, it's not going to work. And so I think a lot of work needs to come in showing the potential of those areas in Africa. And then hopefully we can start to see more conversations around what can be done. And I'll give an example. So I think as part of what you read, I led the team that designed the eNaira, right? And people will say, oh, what happened to the eNaira? One of the critical points of eNaira was to be able to do cross-border payments. But unfortunately, many countries across Africa are still way behind in understanding what the CBDC is going to look like. It requires a lot. And in my time, we actually had a lot of countries come to us to say, okay, what are the learnings? What have you learned on eNaira? What can we do to help ours, right? And I think that sharing of knowledge has been helpful, right? Because I can tell you, we learned a lot in designing and launching the eNaira. And even though the adoption hasn't come on board, there are a lot of plans for the eNaira that will come as time goes on. But for you to be able to then trade that cross-border, you need other currencies to also have the infrastructure to support it, right? And so that's the kind of, we need to share our learnings across and help other countries to also, build on those learnings, and we can all come together and build an infrastructure that can help connect Africa.
Thank you so much, Lucia. Lucia is saying everyone should communicate with each other more, and then we'll all learn. And as I totally agree with that. Now we want to head up to the Q&A session. I know that during the chat so far, the speakers have responded to a few questions that you put in the chat box, but I want everyone now that has been making notes to share questions that they have, with the panelists here in the Q&A box. I'm going through the questions now, and I'm going to pick out as many as possible for them to answer. I will start with the one that I think looks like it has a very simple answer, and the question is, someone's asking, Festus Ebbing, a developer, is asking whether AZA Finance adopts blockchain in its payment technology. I think Elizabeth or Fatima or Nat could answer that.
Yeah, we've already mentioned before, we do trade some digital currencies, mainly stablecoins now. Over the past 10 years, we have traded what the market wants the most. And so we're agnostic, and we're willing to see what the demand is. We trade the most popular, most liquid, and only with partners that are businesses. So if you're an individual trader, we don't have a retail product. That's for many reasons beyond this webinar. But, that's what we do.
All right, thank you, Elizabeth. So Mansoor Johnson is asking whether do you think that centralizing some security checks like KYC and AML will lead to cost reduction? So maybe Lucia, Fatima, who wants to answer that? Or Dare? Hi, Dare. Do you think that centralizing some security checks, KYC, AML will lead to cost reduction?
Yes, I think it will, because at the end of the day, one of the things that drives up this cost is the level of risk. Today, we don't really know how to track who, and we don't know who is who. We don't know who is dealing in arms and drugs and weapons, and we don't know who is running a legitimate business. We don't know who is going to run away, and who is a viable business partner. If I could use the example of the US, the social security system, where they have everybody with a social security ID, it gives lenders the confidence to lend money because they know that they will get you some way or the other. And there is also the credit rating system that helps them to sort of blacklist anybody that is not conforming to the ethos of financial integrity. So if we have a centralized KYC and we know that if I do any fraudulent transaction or if I don't honor my commitments, it's very easy to locate me or blacklist me so that I won't be able to do business again. If we have that kind of thing, I think it will help regulators, industry players, and governments to have more confidence in the system. It will strengthen the system itself and it will lower the cost of the transactions.
Thank you so much. Before we began this call, we actually asked our participants that were joining to send in questions that they would like the experts on the panel to answer. So I will read out a few of them to you. Right. Someone is asking, what exactly is the root cause of the delays in the turnaround time for payment settlements in Africa?
I think Nana has a great explanation for this. He's on the ground the most. Not to put him on the spot, Nana.
All right, Nana.
Yeah, I think several factors, but most prominent of it is the corresponding banks. Depending on the market that's sending the market money to, sometimes it can go as many as 2 to 3 to 4, and sometimes they can come back and ask questions about the invoice you're sending. Do you have contract? So many things. So it depends on the market you're sending the money to. But in most cases, it could take like 2, 3 days, 4 days because of there's different players within the space. This corresponding bank will be okay with this document, but the second one will not be okay. He will ask another question. So I think that's generally one of the many causes of the delay.
Also, I just wanted to add timing. So, some of them have trading times. That also affects. So some close at 2 p.m., some close at 4 p.m. So if it shows up at 2, it only processed the next day. So all that also adds to the complications as well. If it shows up in the US and they're sleeping, it's, that already sets you back by 6 hours. All that also adds to that, in addition to what Nana said, because by the time it shows up the next day and they have a problem with it, you're probably sleeping, they come back to you the next day to talk to you about it, then it moves. All that also affects as well.
Thank you for that additional information, Lucia. Somebody is asking about, somebody is asking, how best can the issue of trust be solved in the African payment ecosystem, B2B or P2C? What's your perspective on the best way to approach, solving trust issues in Africa?
When we work with customers, they often do test transactions of small value. Try us out. It's like buying a new shampoo. Number one, try us out, see what works. That's number one. That's the easiest, lowest hanging fruit. Second is look for licenses. If you have a license in Europe, if you have a license across Africa, if you have multiple licenses, that means this company has to do sanctions checks, has to keep core capital in certain markets, in bank accounts, reserve capital, has to be audited quarterly, annually, has to abide by strict consumer regulations. So, one is to try it yourself. If you don't believe it, try what you see. And if the partner doesn't want to do a test trade with you, that's a red flag already. Number two, look for licenses. Look at who they work with. Are they working with a bank that you know? Are they working with a provider that you know? Are they asking to meet you on the corner, with a paper bag? I mean, the way you interact is your first sign. And the second is the way they interact with others and what kind of licenses and certifications. Lastly, we have, for those of you who have an engineering team or who integrate to the API, we have a lot of international ISO certifications and SOC 2 certifications. We're one of the first African fintechs to have SOC 2 standards and to be certified across the continent. And we're very proud of our information security team and the work they do to keep us safe and our customers safe. So you can look on the website of the provider to look to see those information security certifications as well. Those are very difficult to achieve and require constant vigilance. That's another reason. I know that in this industry, there's also a request to pay first or to prepay. AZA does not pay first or prepay for customers. We do it like the rest of the world does. I think that level of latency trust is a leftover from the informal sector. I think going forward, we have to trust our institutions that accept payment and then pay out. And I think, we'll get to that place with more regulation, more oversight, more certifications, and more experience.
I just wanted to add transparency. Transparency around the cost, how long it would take, what the process would be is very important, because what typically happens is there are always hidden costs which no one talks about. So I think that is very important. And the user interface can also help, just making it easy for the customers to use, because sometimes one of the challenges when I was the head of digital business at Zenith Bank was that people will say, we don't know how to use the app. There's a lot of confusing things, that in that way builds trust, because it's so easy to use. Someone who doesn't know all these terminologies, is able to quickly use the process, and, they're able to process their payments on their own, and they see the cost, they know what it entails. So all that can help build trust in the system, because, they then know that whatever they get, whatever they see is what they get. There's nothing that will come in later to bite them.
Thank you so much. Thank you everyone for listening. We are about to end the session. We've had a very great chat so far with the experts here. I would like to ask all of us to fill out the post-event survey that has been sent to the chat room. The listeners, please fill the survey so we can get feedback on how this event was for you. Lucia, Dare, Nana, Fatima, Elizabeth, I want to ask you, do you have any final thoughts you'd like to share with everyone?
For me, I'll say, touching on transparency, in a choice of a fintech partner or a banking partner, one of the key points to also look out for is, the willingness of the business to also share their information with you. So, it's very important for you to understand a company and their operations, make sure they're not doing like money laundering activities, terrorism financing, and whatnot. It's also very important for the business or partner that you're, working with, or you choose to work with, to also, understand, the kind of legitimacy of your business in terms of your licensing, the ISO certifications, the people behind the business, how long you've been operating, what other security issues you've had or haven't had, and things like that. That's like really important in also making a choice of a fintech partner.
Thank you so much. Elizabeth, do you have any final thoughts to share? Or Dari?
Sure. Dari, you can go first.
Okay, all right, thanks. So I just wanted to touch on something that Lucia mentioned briefly earlier as a closing talk, because it's something that's very dear to my heart and something that I'm working on actively. And that is the kind of trade that happens within Africa. Today, we don't have so much trade happening within Africa. It's very small when you compare with other regions like Europe, for instance, or Asia. And this intracontinental trade is extremely important for us. And I know a lot about this because I am actively involved in pushing for the implementation of AfCFTA. We've seen how ECOWAS ETLS has worked and how it has helped to facilitate trade. And we are taking it further now to push across the African Union to get, we from the private sector are pushing to see the governments coming together to make sure that AfCFTA actually works and opens up the borders for intracontinental trade. I think from my own experience that once we can fix this payment issue, the issue of trade will be a lot easier, because today one of the barriers to trade is payment. If we can solve payment, trade will be easier. And as trade gets easier, the movement of people would also be easier, because it's disheartening that within the continent, moving around, especially for those of us from countries like Nigeria, we need visa to enter almost every country, of course, with the exception of ECOWAS and a few others that have visa on arrival programs. So I think this is an extremely critical aspect to bring about growth and development within the continent.
Thank you, Dari. Elizabeth, do you have anything to say to close the discussion?
Yes, I'm just replying to all of the questions as fast as I can. I think this has been interesting to hear how many questions are still on these points 10 years later, where, we have a lot of work to do. Lucia made a call to communicate. I mean, we're hosting this webinar to communicate, and we've published white papers over the years. I've written the first white paper for the CBN on virtual currency back in 2016 with my team. We've been, in Abuja, in Accra, in Kampala, in Nairobi, in Dakar, beating the pavement, talking about these topics for over a decade. We have a huge regulatory and policy team. We meet with the CBN when they came to London a few weeks ago. So, I mean, we're constantly communicating. Obviously, we're competing with other fintechs, so we're not going to share everything. That doesn't make any sense. We're not the World Bank. But as best as we can, we have been also contributing to the ecosystem. And if you look on YouTube, you'll be sick with all the videos we've posted on these topics. So I think, obviously we all want to see this ecosystem work, but and if we say we need private sector actors as well, then we have to see more businesses, see more founders. And I just really encourage all the founders that are on this call to keep building. And, banks are not your enemy, or they're not your friends, they're partners. And I think, we have to work together with the existing system for short and medium-term solutions, at the same time planting seeds for the future. And I think I've seen a lot of founders go way out into the future and lose sight of a revenue model that works now. And I've seen the opposite as well. So we try to surf the middle as a hybrid company, playing with traditional infrastructure and innovative infrastructure at the same time. And we look forward to trading with everybody on this call as we go forward, and to continuing to help make this ecosystem, best in class worldwide. And there's so much potential on the African continent for trade. And this is where the growth of the next century is. This is the population growth. This is the GDP growth. This is where it's going to happen. So we're very excited to be part of that movement.
Thank you so much, Elizabeth. Thank you, everybody. I would like to remind everyone listening to fill out our post-event survey, and also to subscribe to TC Daily, our daily newsletter, and also in a Jiffy newsletter where we share daily news and insight. We are going to share the links with you in the chat room. And I just want to say to all the speakers, once again, I had a great time speaking to you, listening to you, and I'm sure that our attendees also did. Thank you so much for taking out the time. And yeah, thank you so much, everyone.
Thank you.
Thank you, Dari. Thank you, Fatimah. Thank you, everyone.
For having us. Thank you.
Nana,
Thank you.
thank you. Thank you, Lucia. Thank you so much for joining. All right. Bye, everyone.
Bye.
Bye.
Bye.